The power of investing in the stock market. Most people think investing is about getting rich fast. It's not. It's about surviving a system quietly designed to make cash worth less every year. A dollar sitting in your bank account looks safe, stable, responsible. But inflation doesn't care how hard you worked for it. At 3% inflation, your money loses nearly half its purchasing power in about 24 years. Do nothing, and you slowly get poorer in silence. That's where the stock market enters the story. Not as a casino, not as a magic app filled with green arrows and people yelling, "Buy the dip," but as ownership. When you buy a stock, you're buying a tiny piece of a business that raises prices, sells products, expands globally, and keeps moving while your savings account barely breathes. And the math gets strange fast. If someone invested $300 a month into the market starting at age 25, with average historical returns around 10%, they could end up with over $1 million by retirement. Not because they were brilliant, because time did most of the work. That's the uncomfortable part. The stock market rewards patience more than intelligence, which is why so many people lose money chasing shortcuts instead of compounding. But there's a darker question underneath all of this. What happens when an entire generation depends on the market to afford old age, and the market stops behaving the way it used to?